Hey everyone, welcome back to the channel, your number one source for income-oriented investing. What is passive income investing? That is the name of this channel, but what does it mean to me and what should it mean for you? So in this video, I figure, done a lot of ETF reviews lately and of course the regular portfolio unveils, picks of the month, but I do have a playlist, remember. You check my playlist out on strategy, mindset, philosophy. So this video is definitely going to go in that playlist. And if you're interested in other similar videos like this, where I give you my thoughts on, investing strategy and philosophy, you could check out that playlist. But in this video, I'm going to go through what I personally feel unscripted here. What is passive income investing? What is really the goal or the objective and the concept behind it? So hopefully by the end of the video, you'll understand what I mean when I say passive income investing, and most importantly, what this channel is all about. So what is passive income investing? What is PII? In my opinion, the goal or the idea behind this investing strategy is to maximize, your primary objective is really to maximize passive income, right? Passive income investing. You are investing for passive income, to maximize passive income with the goal of enhancing your quality of life and the ultimate end of the rainbow, light at the end of the tunnel goal, to become financially free. Let's face it, everyone, if you're not financially free, which, what is financial freedom? It's if your passive income pays off your bills or not. If you have to go to work because you're not financially free, if you stop working and you can no longer pay your bills, you're not financially free, right? So your income or your passive income needs to pay for all your living expenses for you to be financially free or financially independent. If that's not the case for you, the sad reality is that you are a financial slave. You are financially dependent, right? It's just yes or no, black and white. If you're not financially independent, you are financially dependent. So you're dependent on a job. So the idea behind this concept is really to invest to maximize your passive income, not necessarily your net worth. To maximize your passive income, not your net worth. Big difference. So you could enhance your quality of life now, because let's face it, the more passive income you have, the more money you have, the better your life it could be, right? It's just the reality of things. So the goal is really to maximize your passive income to achieve financial freedom as soon as possible. So this basically means you want to do this in a passive way as well. So yes, that word passive could also be interpreted as passive investing, not only just for passive income. So what does that mean to me, being passive as an investor? Well, you're not buying low to sell high, you're not day trading, you're not swing trading. The key is really holding for the long term. You are a long-term investor where you could be living off your income, some of your income, or none at all. Some people, they have other sources of income. They have properties and they just reinvest all their income. So they just cause a compounding interest effect. So the general idea is that you're really living off of your passive income. You're not touching your capital. You don't need to touch your capital. I'm not saying you can never touch your capital ever, but I feel like living off your interest or just touching that or your dividends and not touching your capital is a very conservative and good long-term mindset to have. Now, I know I say buy and hold all the time, and a lot of people have been criticizing me or asking me, well, Adrian, every month it seems like you're doing a couple of moves and you're selling some stuff and putting it in something else. So streamlining your portfolio, modifying your portfolio is okay, guys. There's no problems with that. If I see a streamlining opportunity where there's a new fund that gets created and it has less fees, it's more tax efficient, maybe I like the fund manager better, maybe the yield is higher, for whatever reason, it could be a million reasons. I rather go with ETFs instead of split funds because I don't have to worry about missing dividends. If I see those opportunities, you could do that. It doesn't mean that you're no longer passive. The idea is, with the buy and hold, is when I buy something, my intention is to buy and hold it long term. So before you buy something, ask yourself, can I hold this forever? Is it designed to pay me all the time? Does it have quality stocks, right? So whenever I buy something, I have the intention to buy and hold it long term, but it doesn't mean down the line after a year or two, I can't swap it or streamline it into something else. So that doesn't make me not a passive investor anymore. Okay, so streamlining is okay. You don't have to be a hardcore, when you buy something you can never ever sell it. Listen, if something else better comes along and you see an opportunity, why wouldn't you do that, right? So another thing when it comes to passive income investing is that total return is not the biggest priority. So when it comes to investing, total return is what most people are all obsessed about. For a good reason, I agree that it's very important. So total return is basically the performance of whatever fund, and it includes both the stock chart or the ups and downs of the capital plus the income. So if you look at the total return of any income-oriented funds, the income is included in there. So you should always look at the total returns if you're evaluating the return of a fund, not the stock chart. Please stop looking at the stock chart. If you see a stock chart going all the way down, is it a bad fund? A lot of people think so. It might not be the case, because if the fund gives out a lot of income every month, you don't see that in the stock chart. So you have to look at the total returns. But I would say that the total return is important, but not the most important thing, I feel, with passive income investing, right? So will you care about a extra 4% return when you're 75 or 80 years old in a wheelchair? I really doubt it. The passive income investing strategy is really more to enhance your quality of life now rather than later. Okay, so that's another point. Another point is, when it comes to being passive, you're not trying to beat the market in any way. I feel like it's almost impossible to beat the market. So you hear that expression all the time, beat the market. Typically they're referring to the average market return. So they'll refer to either the S&P 500 on the US side or the TSX 60 on the Canadian side. So those two index funds kind of captures the whole average American stock market, Canadian stock market, right? So I'm not trying to beat the stock market, everyone. I'm happy with average stock market return, which is typically between, depends how far back you go and which website you check. It's basically between 7 and 10% annually, okay, the overall stock market as an average. So some years it could be minus 30%, some years it could be plus 30%, plus 45%. I'm talking about the average over time is typically 7 to 10% annually. So as a passive income investor, I'm not analyzing individual stocks or individual companies. I'm not keeping up to date with the news and their recent projects and the quarterly reports. I'm really trying to capture the whole economy. So I am trying to invest in everything, the whole stock market. I'm not really picking and choosing individual stocks or companies. And of course, there's some exceptions. There are some covered call ETFs, especially now with the yield max ones, that only have one company, but they do aggressive covered calls on it. So those are fine in your portfolio, but I wouldn't make them a primary position really. So you're really trying to capture the whole market. Okay, so you solve a lot of problems. Passive income investing, I feel, or investing in general, you solve a lot of problems with your time horizon. If you think long term, you literally solve so many problems, because I get questions all the time. Have you heard of this? And there's this war, and there's this prediction. And August, I heard the stock market dips. Guys, who cares? Who cares? If you're a long-term investor, why care about the week to week, the month to month, the short term, even 1 year? Don't be a short-term investor. Think long-term, so you could ignore the news. It's a waste of time. So that's also what I mean when I say stay passive. Sometimes I say that, stay passive. Don't obsess on the news and what's going on. It doesn't matter. The market goes up and down. If you're investing broadly in the whole market, your performance is going to relatively be average over time. So it doesn't really matter what's going on short term in the news. That stuff is really only for people trying to beat the market, where 95% don't do it, goes wrong, and even the professionals can barely do it, right? So that's another point, right? You care much less, and this comes with experience as well. You're more calm, you're more passive, whatever's going on, you're just enjoying your life. And my tip is, instead of focusing on that, try to master your own portfolio. Look at your funds that you own. Memorize what's inside of them, and the management fees, and what's going on with the funds and the fund managers. Focus more on what you're investing than what's going on in the news, because trust me, I've done that at the beginning, and I haven't learned. It hasn't been useful for me whatsoever. So now I barely watch the news or what's going on in the world out there. There's always going to be some crazy stuff out there because humans are crazy. What can we say? So I would say when it comes to passive income or this strategy, that the covered calls is really the bread and butter. Okay, so there's obviously dividends could be a big component of it, and this is where the dividend or dividend growth strategy is a bit different from the passive income strategy. Income strategy, you're really prioritizing income, so there are dividends, but you're really making the bulk of your money with covered calls. This is perfect for someone who's passive like me, who's a bit pessimistic, not really optimistic about how the economy could go. Covered calls is actually a very defensive strategy. It adds defense to a portfolio. It's a defensive way to invest in stocks. It lowers your risk, it lowers your volatility. It does not raise your risk or raise your volatility. There's a big misconception. So leverage also makes a lot of sense. If I feel I wouldn't take leverage on myself, but some people do, and that's fine if you're comfortable with that. But because you're buying and holding something for the long term, a covered call ETF that makes a lot of income, it's a no-brainer for fund managers to maybe borrow a little bit of money, 25% typically, to really boost your return, boost your yield, right? So 25% is not a lot of leverage, everyone. It's like taking a $250,000 mortgage on a $1 million house. It just adds extra yield that boosts your returns over time, because I still feel optimistically that the stock market and the economy goes up over time. I just feel like it could take a long time, or the last 10 years, which were incredible, might not be the next 10 years, right? So I am pessimistic about that. But the market over the last 100 years goes up over time. So leverage is okay. But this is why I really like the covered call ETFs that are leveraged. The fund manager takes care of the leverage. There's no chances of you being called away, margin called, right, if you take leverage yourself. So I think a little bit of leverage makes sense with this strategy, with the income strategy, especially with covered call stuff. And so that's basically what I feel passive income investing is in a nutshell. The priority is you're investing to maximize your passive income so you can enhance your quality of life, ultimately reach financial freedom, and then you could do whatever you want with your life, right? So it's an amazing feeling being financially free. It's very, very hard to get there, but I feel like this strategy or investing strategy is the quickest way to get there, because it's the way to make the most cash flow, consistent cash flow possible. It's not the best strategy, most probably, to maximize your wealth or total return over time or the next 40 years. But it's definitely a strategy that has a lot of psychological and mental benefits. You don't have to worry about the short term. You're investing broadly. You're capturing the average of the stock market. Covered calls lowers your risk. You're getting paid every single month. So time is always on your always on your side, and always your friend, because every month you get paid. Don't forget, these are realized returns. Whereas a growth investor literally has to buy low and then sell high at one point, and because if not, they're not making any money, right? So they haven't realized anything, whereas us, we're realizing passive income and realize profit every single month. So time is always your friend. Every month you get paid, you get paid, you get paid. It's better, you get less and less worried. So it's a very passive style of investing. So the last thing I wanted to mention, everyone, is that this is how I feel and how I use PII. This is do-it-yourself investing. Okay, you gotta make it, just like the title says, you gotta make PII your own. So just because I do some stuff and I change up my portfolio once in a while doesn't mean you don't have to be full income investor. You could be a hybrid investor. You could do a half growth, half S&P 500 and then get some PII funds, half. I know some people do 80-20. Some people do 90 PII and 10% in an S&P 500 because it makes them feel better that they still have some good growth appreciation over time. So it doesn't matter what everyone else is doing and what even I'm doing. The goal is to make PII your own, figure out what works best for you, make it your own. I mean, that's what do-it-yourself investing is all about. That is the beauty. You could tailor your own strategy, to your objectives and your needs based on your circumstances. But in a nutshell, I feel passive income investing, or PII, and the main goal is really to maximize your passive income over time. So I hope this was informative for you. This is just, unscripted, what I feel PII is what does PII mean for you? What do you think are the biggest advantages of PII? I certainly think that one of the biggest ones are, of course, the cash flow and that consistency, but also there's a lot of psychological benefits to it. Let me know in the comment section below. If you have any other questions, let me know, and see you next time. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the ultimate DIY investing package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and US stock markets. And the good news is you'll only ever have to buy it once because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and PASSIV referral links below. So Questrade is the broker that I personally use, and PASSIV is the broker companion tool or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And PASSIV, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of PASSIV is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members, where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram, where you could follow us, or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.